Sanjay Dogre, who's the Senior Vice President and Fund Manager at UTI AMC, joins us live on the show. Sanjay, good to have you. What's your portfolio strategy in this kind of a volatile market right now?
Yeah, I think we have a view that the market is going to be a sideways market in the sense that if you look at the macroeconomic indicators which were prevailing in 90s, be it interest rate or be it inflation, be it a fiscal deficit or current account deficit or political or economic environment. I think during 90s the market had remained in the sideways market. In 1 year market could have gone up or gone down, but when you look at point to point, I think the market has remained more or less at the same level. I think today again we are prevailing in the prevailing situation in the market is somewhat similar to what was there in the 90s, and we believe that the markets are going to remain in the sideways market, and therefore our belief is that the market are going to trade in a range basically. So when you look at the market today at about 5300 Nifty, market would be trading at about 13.5 to 14 times 1 year forward multiple, which is below the average multiple at which the market has quoted in the last 5 years or in the last 10 years, which is about 15 times 1 year forward multiples. So sorry, as we expect the market to trade in the range, so I think market is going to trade in the range of 5,000 to 5,600 and 700, and therefore as the market moves towards a level of 5,000, it's better to add beta into the portfolio, and as the market tends to move towards 5,600, 5,700, it's better to add defensive stocks and sectors in the portfolio.
So are you increasing your allocations to defensives right now?
No, as I was saying, if the market moves towards a range of 5,600, 5,700, then one would contemplate increasing exposure to the defensive sector. But if the market moves towards 5,000, then I think it's better to add beta, because if you look at the market from the market valuation point of view, I think if the market goes much below, then I think it becomes a lot more attractive from the long-term investors' point of view.
What's the call on IT right now, Sanjay? How are you positioning yourself in that sector?
No, IT is somewhat defensive in nature, in the sense that at least one is assured of a volume growth of 10 to 12%, and that is what the guidance one would be looking from the IT majors next year. And the bigger I think another variable which is going to trade in favor of the IT sector would be the currency depreciation. I think the kind of current account deficit we are having today at about more than 3.5%, the crude prevailing at $125. I think the currencies are going to remain in a weaker mode, and that is going to benefit the IT sector. So I think if the market really rallies to above 56, 5700, I think it makes much more sense to increase exposure to the IT sector.
Right. Aside of IT, of course, there has been a lot of interest coming in specific names, especially in some of the defensive stocks, FMCG as well as pharmaceutical. While you've given us a broad call on the exposure that you have to the two sectors, individually, what's the rating on these sectors, FMCG and pharmaceuticals?
No, for example, FMCG, though it's a more defensive sector, but if you look at the valuations at which most of the stocks are quoting, those valuations are no longer defensive. So from that perspective, when the market is relatively quoting at a lower valuations, then one would be better off being in the beta sectors rather than the defensive sectors. So, but for example, if the market really rallies above 5600, 5700, then it would make much more sense to get into the defensive sectors like FMCG sector.
Okay, that's a quick call on FMCG. Some of those stocks have been active over the last couple of sessions, but have now given way. I'd also want your views on the real estate pack. As a fund manager, are you taking a contrarian view there, or are you completely hands off that sector right now? Sanjay?
No, as a fund house, and I think we are completely hands off that sector, because the way the real estate prices prevailing in our country in the last 3-4 years, they are still quoting at a pretty high prices. The affordability at those prices is a big question mark. The volumes which are happening is on a pretty lower side, and therefore we have been away from the real estate sector basically.